Hey guys, and welcome to my YouTube channel. As you know, I'm Emmanuel Undu, founder EMFOREX Academy, the best forex platform, the best forex academy here in Nigeria and across uh, the globe. Okay, so basically today I want to show us market structure. Right? It's a very important tool in trading. Okay, if you can understand market structure, just add a little bit of candlestick patterns and you are good to go. Okay, but where is actually going to get more interesting is if you just have one indicator or maybe two indicator that works with market structure, right? More like a trend line. Okay, a trend line is a good indicator to get market structure. Alright, so what I basically use is the trend line and the stochastic, okay, to know when to buy and when to sell. Alright, so like I said earlier, I spoke about how to make use of the stochastic, which I won't be talking about here. Alright, if you've not seen that video, go ahead and watch my previous video. The link will be at the top area somewhere around here. Okay, so guys, so let's actually dive in. So the market basically moves in a particular direction. Right, it's either going up, going down, or doing what? Going sideways. Now the process by which the market is going up, we call it what? An uptrend. Now an uptrend is simply a process whereby the market is creating new highs, okay, taking out previous highs, creating new highs. Alright, and the high the market is actually creating is higher than the previous high it did created. Okay, and the low is higher than the previous low. So now how we can actually, if we were to use a trend line, we could get a very clean bullish trend line like this. Okay, so but this is not what you are going to, it's not going to be as clean as this in the market. Okay, if not, people will be making profits on the go. Okay, but it's like this. All right, let's not get it twisted. It's like this. Okay, so and when the market is going down, creating a series of lower lows, lower highs, it is said that the market is in a downtrend. Okay, so the market is in a downtrend when it's creating a series of lower lows and lower highs. Okay, and when the market is creating equal lows and relatively equal highs, okay, it is seen that the market is in a range, okay, or is moving sideways. Right, you can see here that the lows and the highs are simultaneously equal, okay, or relative to the demand and the supply level, as the case may be. So um, here the market is basically doing nothing, right? You just have to know, if you actually want to trade in a range, you buy from support and sell at resistance. Okay, so this is, most people trade range, but I don't like trading range in market. I prefer whenever the market is trending, right? So the market could actually range on a higher time frame, but trend on a lower time frame. Okay, possibly in the next video I'll be doing a video on what top-down analysis. Okay, but I'll just do a touch on top-down analysis because of market structure, but I'll be doing a full video on top-down analysis. Alright, so guys, here, so now there's a way I actually approach this market structure. Now, if the market create a new low, okay, which is this area here, this is a low, this is also a low, this is also a low, but here looks like equal lows, right? Then this is a new low. Okay, so the market creates a low. Okay, let's do a little back out here. Now this is a low here the market did create. So if the market creates a low, okay, this was the low from a bullish trend. Okay, this was the low from the bullish trend. You see the way the market did range here. The market ranged here and gradually sloped to the downside. Right, I could still remember when I took a trade from somewhere around here. This was uh, the FOMC news release June 16th. I can't forget this day. Okay, this was the FOMC news release on the 16th of July of June 2021. Alright, that day was a very sweet day for me. Okay, I can't forget the profit I made from this move was very interesting. Okay guys, so let's roll in. Alright, so guys, you see how well the market was creating series of higher highs here. Okay, this is a bullish trend. Right, it got to a very point where the market stopped creating higher highs. Okay, as you can see here, this was the most recent. Okay, let's channel this because this was the highest point here. Let's channel this and see the structure that was taken out. Alright, so this was the structure that was taken out by this just little. Okay, it took it out very slightly. Okay, but because of this range, the details may not really be uh, taken. Okay, so this was the most recent structural high. Right, it took out these highs here. Okay, so here now is what the area. This was the source. Okay, I call it a source, or most people call it order block, right? But I prefer to call it a source. What I mean a source is where the market gained strength to break this level. Okay, where the market gains strength, where you can see bulls coming, okay, to break this level is what I call a source. As you can see here, the market bulls came in here and broke this level. So this is the most recent structural low here. So once the structural low is broken, it's likely going to be retested, okay, which was what happened here. Okay, the market broke it down, okay, you can see here, and did a retest. Tried to push, but liquidity was not available. Came back to the source that broke this structure. Okay, it broke this structure here. It came back to the source. All right. So this was a new structure, a new bearish structure. Okay, this was a new bearish structure. It was taken out. So here now is a valid source. All right, so the market came back to the source, tried again, it couldn't. Did a little consolidation at this point and tried again, which took it out very slightly, right? What is actually going on here? I just slight takeout, right? You can see here the low is lower than this. Okay, it's very small, but in the lower time frame is very big. Okay, so just taking out here, market came back to the source that broke it. Okay, so from the source, momentum started coming in gradually, right? And price did what? Rallied down. Okay, taking out this source here. So now here is a new source. Okay, so this was where momentum was actually building. So here was from this point, it was where I took out this new structural low here. So now this is the new source. So that's why the market was playing around here, looking for momentum. Also, it broke out this structure here becoming a new source. Okay, why? Because why you're not seeing this thing very well is because you may not be really seeing it very well because this is the market is still choppy and momentum is not really strong. Okay, so the market came back to source and rallied down. Okay, so once the market successfully broke all these levels, right, this was the most recent structure or the lowest structure that was relative to price movements here. You see, it also broke this one, but did a little reaction here. Okay, when it got to this point, did a little reaction here, dipped in for discount, pushed to touch this area here to take out the liquidity at this point. The market dropped for a new low. So Now what we're actually interested in is we're interested in those structures that are being violated. This one was violated here. So what we're actually expecting if momentum was in this market is a push to the downside, then a retest of the structure. Okay, something like this. This is what we should be expecting if momentum was in this market, then a continuation to the downside. Right, but since momentum was not in this market here, we are looking for the discount. Okay, the discount that broke the source. Okay, we are looking for discount. Right, so the market moves, like I said, the market moves from premium to equilibrium to discount. Okay, so I'll be explaining those three phases to us. Okay, but I'll basically start from discount. Whenever the market is at discount, it basically means that the market is within 50% to 61 below. Okay, so if the market is below 61.8% fib level, the market is seen to be in a discount. Right, so let's see from this point here to this point. Right, so the market was within the golden zone, which is the 50% and the 61.8%. All right, so we could see here that the market, after reaching for discount, tried. Okay, it couldn't uh, do much. Okay, 50% remember is equilibrium, 61.8 is discount. Okay, so then 32.8, 38.2 is premium. Right, so now the market reached in for 50%, okay, but couldn't break, gave more like an equal low. Right, momentum reached in and entered into the discount arena properly, reacting to this OB here. There's an order block here. Okay, there's an order block within this region here. Let me quickly delete this guy so you can see there's an order block here. It's just like a structure, a little slow in price. Price slowed down here, right? Because it was trying to take out this bullish structure here. Alright, so price slowed down here. Okay, and took out this area here. Okay, so since price took it out, there is momentum here. Okay, so the market dipped in properly for the momentum here, which sellers entered into the market and gave this drop to the downside. Okay, so now the momentum we're actually interested in is this guy here. Okay, we're interested in this low because this low was a result of this previous low. Okay, so this is the next structural low here. After that, this. Okay, so price came back here, did react to price. Okay, but then it came in contact with a level that was strong. Okay, which is going to lead us to talking about demand and supply. Okay, maybe subsequently, I think I've not done a video on demand and supply. It will be the second video after the top-down analysis video I'll be dropping this week. So demand levels are levels where buyers are, okay, and supply levels are levels where sellers are. So whatever will push the price to go up is because it came in contact with a zone filled with buyers, okay, and whatever will push price down is because it came in contact with a zone filled with sellers. Right, so you need to understand this concept. Okay, you need to understand this stuff, and it's going to help you in your trading. Okay, so now the market came here and failed to reach down. Right, so basically what we should be expecting is since the market broke the structure here, should do something like this. Okay, the market should do something like this, reach for this liquidity here, okay, and drop. Okay, but buyers here were strong enough and pushed the market up. Okay, taking out all these liquidities at this area here, See this very point here. Okay, so now we are not really interested in catching all these moves in the market. Now that's why I have my trend line here. Okay, because I want to show you how I do it. Right, I want to show you how I do it. Now, whenever I come into the market, basically, I like working with my stochastic oscillator. Alright, so whenever I come to the market, this is the 4 hour time frame. I just come here and see a picture. Right, there's a picture I come in here to see. Right, and now that's what I'm coming in here to see is the way the previous candle closed. Okay, the way candle closes on the 4 hour. I just like seeing candle close on the 4 hour because it gives me solid decisions to what I should be doing. Alright, so once I see the way a candle close or a group of candle close on the 4 hour time frame, okay, I base my structure of that. Right, so I base my structure of candle closes on 4 hour time frame. Right, I just want to see the way candles are reacting on the 4 hour time frame, which is the higher time frame as a day trader. Sometimes I use the daily. Okay, if the 4 hours is a little confusing, I head up to the daily time frame. Okay, so I could see what the big boys are actually doing on the daily time frame. Okay, so if the daily time frame is giving me a direction, then I will structure my direction the daily is giving me down to the 4 hour time frame. Once I get a structure on the 4 hour time frame, I go down to the 2 hour time frame where I check out my stochastics. Okay, because I like the 2 hour time frame because it gives me a clearer understanding of the whole stuff going on in the market based on the structures. Okay, I see clearly how structures are being violated, how structures are being broken. Okay, so you could see here clearly the structure was broken, but it was on an uptrend. Alright, so it was forming an uptrend. That's why the market did not really continue the momentum to the downside. Now you could see here this bearish candle could have been a push to the downside, but um, the move was designed to be bullish. Okay, so here now, what I'm actually interested now is I look at my stochastic first of all, but I look at my trend line also. Now, okay, let me show you guys. Let me show you guys one trick. Let's go to the 1 hour time. Now, this 1 hour time frame is a very important time frame. After I'm done with this, I'll show you the 15 minute, then I'll go back to the 2 hour time frame. Now, this 1 hour time frame is very important because as a day trader, I'm interested in catching intraday movement. Like if I go down, if I zoom out, I'll show you guys here. If I'm interested in looking for 40 pips in a day, okay, I know the structure, or sorry, the pairs I'm actually looking out for. Okay, in those pairs, I have those that are actually bullish and those that are bearish. Okay, those that are in a bearish structure and those that are in a bullish structure. Okay, so once I'm in this market, I'm looking for buys. This is a bullish trend. This is a bearish trend. Once I'm in this structure now, I should be looking for sells. Once I'm here on the 50 pips daily range, I should be looking for buys. Okay, this is the XY, which is dollar index, bullish structure. Uh, Once I'm in this market, I should be looking for buys, right? Then bearish structure. Once I'm in this market, I should be looking for sales. Now this is 60 pips to 100 pips daily range. So, uh, especially the GBP and the JPY pairs, if I'm looking for 60 pips, okay, I know where to get them, right? Let's say let me show you why I did this. Let me pull up my section break so you see what's going on here. All right, This is about 189 pips, okay, in a day. Right, this is about 74 pips, okay. An average, that's what I'm talking about. An average, if I'm looking for an average of 60 pips to 100 pips in a day, where I should be looking for them, this is GBP 134 pips. All right, this is 35 pips. All right, so the market didn't really do much here, okay, but since this is the bearish structure, I should be looking to sell from this point, okay, sell from here and hold it to this rate maybe next day, all right, for 60 pips, okay. It will actually be filled up the next day, okay. So some days I could hold a trade for about 2 days, but I don't really like holding trades for. I just like whenever I come into the market in a day, I close my trade within that day, okay. So this is 77 pips, right? So if I had entered from this point here, I could have made whooping 50 pips or more, okay. But if I see that the market is likely going to continue the move the next day, I could hold for longer period of time. So why I actually did this is because I want to be in the market when it matters the most and look for the most amount of pips possible I could get. Okay, so if I was to enter this market from here, let me draw down this guy here. So this is 65 pips. So if I'm mixing 20 pips to get 65 pips, it's not a bad risk to reward. Okay, so this shows us that it's possible that we get certain amount of pips daily. Okay, so you can't be coming to Euro USD, okay, looking for 60 pips in a day. You may not find it. Okay, you may not find it. From this top to this bottom here, you are getting 40 pips. Okay, from this top to this bottom here, you are getting 40 pips. So GBP USD runs about 40 pips average in a day. Okay, average 40 pips. Sorry, Euro USD. Sorry, from here to here should be around 40. Okay, you can see. So if I'm looking for 40 pips, yeah, I will come to Euro USD. So if I'm coming here, I'm not basically looking for 40 pips, I'm looking for 30 pips. I'm looking for where I'll risk 10 pips to make 30 pips in a day. A good risk to reward, okay? So I know where I'm looking for certain things, okay, and how to find them. So now, combining market structure with stochastic, okay? Basically, I've spoken about market structure. So as long as the market is taking out highs, you can see here, as long as the market is taking out highs, right, the structure is still bullish, okay, until it takes out a bullish structure like it did here. Now the structure has been tampered with, okay, so we need to look for a retest of structure, which was what happened here. Then we sell this market and you can see the potential wins on this market. All right, so as long as this market is still at this area here, okay, then I should be looking for what, buys. Okay, so my trend line, this is the 50 moving average, is still connecting to the top. Okay, so as long as my trend line is below price, buy. Okay, once my trend line goes above price, sell. Okay, so whenever my trend line comes close to price, okay, I should be looking, I should be very sensitive to structural breaks. Okay, I should be very sensitive to what, structural breaks. So whenever price and my trend line is having a little communication, something like this, okay, and I see a structure that was being broken here. Okay, this structure was broken here because it took out this low here. This is the low, it took it out. So this is the value structure, and it's being broken here. So this is something I should be looking to enjoy this bullish ride. So now how I make use of the stochastic, my stochastic setting is 1433, the default setting on basically all platforms. So it works with the direction of the trend. okay, works with market structure. All right, so whenever the market is in a bullish trend like this, I should be looking to take the market from when it is what, oversold. Okay, I'm not looking for when it's overbought. All right, I'm not interested in the overbought nature of the stochastic when the trend is bullish. Okay, I'm not interested in the overbought nature. What I'm actually interested in is the oversold nature. So if this market is oversold at this point, all right, and I enter from this point, I see, okay, I go down to a lower time frame, which I'll be sharing with you guys. Okay, and I enter at the open of this, and let me see, I'm looking for 60 pips. Okay, then my stop, let's say 20 pips. 20 pips is too much. I won't reach 20 pips on this. I'll just put below the structure here. Okay, so this is how I'm going to play this trade safe. All right, so you can see how well the market I got filled up here. Okay, so this is more like you knowing what to do at a particular point in time. You can see if the market is bullish and the stochastic is overbought, okay, and you can see from the overbought nature to oversold, it's just basically range the whole time. Immediately the market became oversold and crossed over, you can see how well buys there pushing in. All right, you can see buys there pushing in. So whenever the market is in an uptrend, look to enter the trade from the oversold region. Here also the market is still in a valid uptrend. Oversold, push, oversold here, push. Compare the oversold and the overbought. You see the market became overbought here and became oversold here. So you can see the push was not that much, right? You can see here overbought. Just let me remove this guy from here. You can see overbought here. Look at this my line here. Oversold here. You can see it from when the market became oversold to when it became overbought again. You see the whole entire move. If I'm to calculate this from this point to when the market was overbought, 83 pips. Okay, but from when the market was overbought, oversold, to when the market was overbought, it was just slightly 40 pips. Okay, so you don't really want to go against the trend. Okay, very important. All right, so now let's look at a bearish structure. All right, so the market became bearish at this point here. Okay, the market became bearish at this point. So look at the nature at which it was overbought. All right, so it sold down. Now from overbought to oversold, still in the oversold nature, the market was still selling. Okay, oversold, the market is meant to buy. Okay, but still in the oversold nature, the market is still selling. So now the market happened to become overbought here and drove down. Okay, but I had a little misunderstanding here and did not come back up here. But if you had your stop slightly above this high here, something like this, okay, something like this, and you had your stop somewhere around here, 20 pips for 60 pips, this would have been a win also for you. Okay, but let's play it safe. Okay, so from this point the market was overbought. Okay, you see the nature at which it's selling. Okay, so the market here also, okay, from this point the market became oversold, but to this point. So whenever you combine these guys with market structure, okay, market structure and basically price action, knowing where the market is going to come to after this particular movement, it's very important to know these things. Okay, so the market crossed over here and still selling. So Remember, my trend line is what is a bit close to price. That's why the market is choppy. Okay, but still yet, the structure is still running bearish. Alright, so here overbought, drop. Here overbought, drop. Hunt of equal lows expected. Also overbought, drop. Pushed up, overbought, okay, and dropped. Okay, still dropping. So using the stochastic is very important. If you go to the 2 hours, okay, why I like using the 2 hours, like I said, the stochastic is very clean there, right? You can see the entire noise on the 1 hour time frame, but the 2 hour time frame, less noise. Okay, less noise. You see here, if you were to write this trend from here, from this point here, okay, if you were to write this trend from here, see 1 2 3 4 5 6 7 8 9 opportunity, and this is the 10th one for you to make profit on this market. So let's say out of these 10 opportunities you got 5, and out of 5, a good risk to reward, you're on top of your game. Okay, so at this point where the market crosses over, you should not be taking trades from here. Okay, you see it won't last. Okay, if you had to hold this trade, let's say you want to hold it for a week, man, you're gonna get smashed. Okay, because and once the market goes against you aggressively, it pushes. Okay, there's no space for return. All right, but let's say you are selling, all right, and it's sold to this point, the market buys back a bit. Okay, let's say you are selling at this point here, right? It's sold to this point, the market decided to buy close to your entry. You see the way the market dropped. Okay, why? Because you are with the market. Okay, you're not against. Okay, but you are for the market. So from this point, if I'm going with the crossover, this is it. Okay, out of 10 I should be able to get like 5. All right, so 5 over 10 is a very good score, especially when you have it combined with risk to reward ratios. So from this point now, let's look for the oversold regions. 1 2 3, and this is basically, okay, this is the 4th one. Okay, this was where the trend changed. Okay, so this is 3. Okay, out of 3 you should be able to get about 2. Okay, not bad. Out of 3. Okay, so with good risk to reward, 2 over 3 can give you, let's say you have 1:3, okay, and you had 2 over 3, that is you gaining 6 and losing just 1, right? So the total 5 in profit. So that's very insane, guys. That's very insane. So sticking with market structure, knowing when the market has changed is when the market has broken a structure, a key structure, not just a structure. Okay, let me look for any structure here. Let me see. Let me see. Okay, market broke. Let me see if I could find any structure. Just any structure at all. Just any structure. Please help. Okay, couldn't, can't, won't, may not. All right, so this is a structure here, but this is not a key structure. Okay, this is not a key structure. This structure here is not a key structure. This is the only key structure I'm seeing here. Why? Because it took out this high. This structure didn't take out this high, so price came down, reacted to this structure here. Okay, reacted to this structure. But when see the reaction here, when price didn't find much liquidity, it actually dipped in for discount. Okay, so uh, trading with key structures are very important. Knowing when key structures are broken is very important. Alright, so let me see another key structure. Here's a key structure here. Took out this high, market broke it, retested the source. Okay, so the market always retest the source, right? The area that broke, not the broken, the area that pushed for the break. Okay, so you see here, this pushed, the market came back to test this area here, so the previous high. Okay, so let's see, this was not a structure, this was a structure, this is a structural low, so from here, bettered structural low. Here's a little choppy, I can't really see clearly there. So mixing this also with trend line is a very powerful technique. Okay, but because of this video, I hope you guys were able to get one or two things that will actually help you. If you didn't get anything, remember to know that a key structure is a structure that has taken out either a high or a low, something like this. This was a low, took it out, created a new low. So now this is a level, the structure is recognized. So if price breaks here and comes back, it's going to come back to this. You see how well price respected this area here. Why? Because this is a key structure. Okay, so thank you guys for sticking to the end of this video. All right, do well to hit the like button, do well to subscribe to this community. All right, and also turn on the notification bell icon so you don't get to miss any videos I'll be uploading. All right, so I'll just be sending this video straight to the YouTube community without any form of editing. Okay, I just want to make it as clean as possible. All right, so guys, please do well to subscribe, do well to share, like, comment. All right, help this community get to the level you will want it to be. Okay, so thank you guys for sticking to the end, and remember, I'm still your favorite Emmanuel Undu, founder EMFOREX Academy. For now, guys, it's actually going to be a goodbye, and have a wonderful trading week.